Whoops. All right, let's get this show on the road. I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Not anybody else's, but your own. Position disclosures, so many less positions. I'm feeling light, I'm feeling nimble, feeling good, even as the market sold off today. I am out of Apple, I am out of Amazon, I'm out of SXC, I'm out of BABA, I'm out of something else, I think. Very close to being out of a couple others of these names here that just didn't quite trigger my stop loss. I almost kind of wish they would have, especially with Google. Google was closed almost right at my stop. Microsoft pretty close too, but I was able to actually scalp that Microsoft. I got trapped in Microsoft on a long position into the close. I didn't get stock on that first scalp that we were talking about in the VTF, but then I took a second one there where I bought. I bought at 3:59 and 49 seconds in Microsoft. I was able to uptick a price at 290.36 and then sold 73. So it was a fun little Felipe style scalp there into the close. But let's talk about this market. This market feels different. I've been saying it for the last couple of days. I said it in yesterday's afternoon meeting. I said it again in this morning's meeting. And make my face bigger? Sure. Oops. Lost the program. Man, my technology skills are just no good. Luckily, I know how to trade. Yeah, like I said, said it, last couple of meetings here, and really, it almost kind of goes back to this Apple day that we had a couple trading sessions ago, where we just had this bizarre price action. We had a failed breakout to the upside, momentum move, just going to a 15-minute chart here so we can see this price action clearly from a couple days ago. Failed breakout on momentum above 150, new lows in the day, V bottom, new highs in the day to actually close above 150 for a confirmed daily breakout on the chart. And then yesterday, even though I said for yesterday's morning meeting that I expect 150 to be like loose support, like that it's probably going to struggle to hold it perfectly as support. Like we compared Apple and Microsoft. Microsoft held this 290 support perfectly 2 days ago on its pullback, but there was no extension there. The space between the 8 and 21 EMA, as everyone I think is aware who's on the team, is a space that I consider to be the technical equilibrium for any stock or any market that I'm looking at. So 4 trading sessions ago, Microsoft broke out through 290. 3 trading sessions ago, when the market was weak, the same day that of the wacky Apple price action, this came down and held 290 perfectly, and then bounced back up, gave an inside day yesterday. The reason why I thought Apple would be looser yesterday with 150 and not hold it perfectly as support like Microsoft did was just because it had more extension to it. So yesterday's price action was fine, but what I ended up doing was I tightened that stop up in Apple tremendously, which I really don't typically do this when I have stock that's this much in the money. Some of my Apple position is literally from this day, September 21st. My price was about 104. I think my price exactly was 104 from that day. And then I had the stock from this ad at 128 on this breakout that we spoke about at 128 that led to this upside move here. And then even though this is a bullish pattern that broke to the upside, technically, your technical follow through here would be about 155, 156 in Apple. This price action the last couple of days just really started to concern me, starting from 2 days ago. Breadth being really poor, seasonality. Then, we're looking at the information that Pat was supplying in the morning note this morning about some of the weakest, not that we've had any major pullbacks in 2021 really, but some of the weakest price action has happened around options expiration or has sometimes been front-running options X. There's just a whole bunch of things started to come together where I pulled the trigger on really tightening up some of my long stops. And I'm happy that I got stopped out of Apple. For obvious reasons, hindsight's 2020, right? But I'm happy now that I got stopped out of Apple, and I really tightened that up yesterday. I'm happy. I'm fine with being out of Amazon for the time being. I mean, these are great companies. Obviously, they're companies you want to be in. I think in the long term. But for the moment here, with this market potentially showing us that it might want to break down a little bit, I'm happy to be quickly getting out of some of these positions and then kind of reassessing from there. So going to our daily technicals here, let's do the usual thing that I do at the beginning of meetings. So SPYs closed down about 1.2%. Qs closed down a little bit over a percentage point, and the IWM closed down about 1.1%. So selling was pretty broad-based kind of across the board with the indices today. What about even the Dow, which I don't look at as much? Dow's down 1.1%. So selling was pretty broad-based, and we do tend to see that when markets start selling. They tend to sell everything. Correlations across markets and stocks tend to increase in bear markets and down moves. Selling is just, it's a different animal a little bit than buying. And short selling is also, by the way, if people are trying to profit on short selling, is a little bit of a different animal than just being long. Markets tend to go down much faster than they go up. You know, even here recently, these last few months, this upside grind in the SPYs was exactly that. It was an upside grind. But when the down moves happen, they happen very quickly. Even this like little dip here in July, just 2-day move, where that 2-day move is like a month's worth of upside price action. That's pretty typical on how down moves occur. They tend to be much faster. I like to say that, you know, when it comes to long positions in the market, you really take those longs, and if you're looking to maximize reward, they can be swing positions that are, you know, multi-day, multi-week. So it's like you own your longs, but you borrow your shorts. Pun intended, right? You borrow your shorts, pun intended. So, but what I mean there is like your short selling positions tend to be much shorter time frame than your long positions if you're trying to maximize reward, because those down moves are sometimes just 3 days down, or maybe even more than that, 5 days down, but they can be very vicious 3 to 5 days when they start selling everything. So we spoke about this morning is yesterday's low in the SPYs where we held the 21 EMA. Is that just another higher low in the uptrend of the SPYs, or is this something that we should be more taking note of as a little bit of a, you know, additional warning signal? With the Qs, same thing. You know, we still closed above the what day of the week is it today? Say Wednesday. So we still closed above Monday's low. We still closed above the 21 EMA. So technically, your picture at the end of the day in the Qs was still intact. It was still a bull market, but really, again, is it a warning signal? And what we said was, if we really start losing yesterday's low in the SPYs and yesterday's low in the Qs, that's a signal that we got to get out of the way a little bit more on our longs and potentially start doing some short selling. Into the VTF, I was kind of hollering that I wanted to start doing some short selling, but I felt like there wasn't enough time left in the day. Where I really wanted to start doing my short selling was right in here at about 340, 345, right into this little bounce back into the 80 EMA on the small time frame. That's when I wanted to start doing some short selling. I didn't really pull the trigger on that because of the time that was left in the day. With just 10 to 15 minutes left, I felt it would be difficult to get a big enough of a profit cushion to want to keep a swing position to the short side. Clearly I was wrong on that, because in this 15 minutes into the close from when I wanted to actually short, I was looking at potentially shorting Qs at 340, at 364. And I was like, oh, I don't know if there's enough time. Well, we closed $2 lower than that. It probably would have been, especially because I do still have longs on. I am still net long, for sure still net long, even though I've taken a lot off the table here. That $2 of a profit cushion in the close might have been enough actually for me to take that trade, keep it overnight, and then have a little more security should we gap down tomorrow. There's a real chance that we gap down tomorrow, by the way, because the way the selling came in late in the day and how we closed really weak and closed on lows, there's a real situation that we see a gap down tomorrow, and I won't welcome that, to be honest. I think a gap down tomorrow is really tricky because it's going to be difficult to short it. I'd love a gap up tomorrow, because I think a gap up we could possibly start looking at putting some short positions on for the first time, by the way, in a while. You know, people have been asking me in afternoon meetings a lot, like, Derrick, how will you go from net long to net short? And I pretty much described it as a process of getting stopped out of swing long positions that I'm in the money on as to give back profit while getting short when the signal comes in. And what I was saying there was basically the last 15-20 minutes of the day. That was the first time I feel like I've really seen a short signal for the market, or you can start doing some short selling. And you know, for me, that would also be getting myself a little bit more hedged. But I'm still, even though I feel a little bit naked because I don't have any real shorts on, yeah, fine, I'm short some AMC, but it's light. I don't feel uncomfortable because I still was able to make money today to the long side in the market. We had some good call outs, and I took off enough long exposure between yesterday and today that I'm not going to be too upset if we gap down to 360 tomorrow and I'm walking in the door and my P&L is negative. But the problem with a gap down, like I'm saying, is it's going to be really tricky. Because then it's going to be, we gap down to 360 tomorrow. I'm just looking at the Qs. We gap down to 360 in the Qs tomorrow. It's going to be difficult to short 360. It's difficult to short a common gap to the downside and to support 360 support. Technically, you should be coming in and buying that. But I also feel like buying the morning after the first down day is too early. So we open up at 360 tomorrow. Technically, you probably should come in and be a buyer of that. Maybe I will do that on a very small initial time frame and see if it kind of holds an opening low or something like that. But if we gap down tomorrow to 360 or even a little bit below that, we're not so extended where I can have a ton of confidence to come in and buy just on, again, the morning after the first down day. But then we'll also be gapping down too much to really be adding those shorts. So we'll assess all that tomorrow, obviously, when we have the new news and we see how the market gaps. But today is a real day to take notice of. It's a real day to take notice of. It's, you know, that's why risk management's been key. I've been saying all month that I've been very specifically trying to not put new risk on in this market. And then the last couple of days, I took that as a signal to start really tightening up my open risk and open P&L for open positions. And now here we are today into the close talking about putting on short sales for the first time. So Qs closed below their moving averages. They closed below their first level support. Their second level support is 360. And support after that in the Qs here is not really until your third level of support is way more down there. Like this 342 pivot from the low in July. Not saying we're getting down to, sorry, 352, not 342. Not saying necessarily we're getting down another 10 bucks from here, but it certainly wouldn't surprise me. SPYs here, same thing. Closed below the 80 EMA, closed below the 21 EMA, closed below yesterday's low. Next real level of support in the SPYs is that key 436 that we had been speaking about in July and the beginning of August that was holding. So 436 is your next spot there. And same thing though, we have a big gap down in the SPYs to 436 tomorrow. Technically you want to come in and buy that. I don't really like buying the first down morning after the first down day though. That's going to be a really difficult open if we gap down. So again, we'll assess all that in the morning. As far as trading today goes, some good stuff, some not so good stuff. So I mentioned in yesterday's afternoon meeting, we talked about this MGI chart. And I mentioned to you guys, like, let's look for stocks that look like this MGI. Like, this is the stuff that, because I spoke about this in the morning meeting today. It's an interesting dynamic that we're in right now because I'm really concerned about the SPYs and the Qs breaking down. And at the same time, I look at a stock chart like MGI, and there's a whole bunch of stocks right now that you could type up that basically look like they're in bear markets. This MGI here had like just a couple of rest days within the confines of basically a month of selling at this point, and then gave a little bit of a higher volume doji yesterday with some extension, and you know, broke back below that $9 but closed above it yesterday. To me, that's a signal to come in and buy this. So MGI was one of my better trades today. I got a little bit lucky on my buy. When I typed this thing up this morning, I want it to be long versus yesterday's low. When I typed it up, the inside bid was, I believe, $8.91. So I just joined it at $8.91. Guess what? Low of the day, $8.91. So I actually bought the low of the day in MGI, not because I'm some amazing trader, but just because I wanted to be in it versus yesterday's low, and I went inside bid and got lucky to get filled. So this one, especially if you want to consider, like on the one hand with MGI, This tail here on the upside, it's not that bad, but it's a little bit more of a tail than I would like. I wanted a stronger close than this, closer to highs. But if you consider what the market did today, to get that little bit of a tail, especially when most of the selling came into the close, I'll take it. I'll take it, right? So MGI was a really good trade today. The disappointment one for me, at least, was this Tilray. I lost money in Tilray today. I was really excited about that news after hours yesterday. We talked about it in yesterday's afternoon meeting as it came out. I thought it was huge for this company. And after hours, when we were talking about it, it was trading at $13.50, and I made a comment. I was like, "Oh, I'm sure I'm not going to buy this $13.50 here after hours, and tomorrow morning when I get to the office, it'll be above 14." And sure enough, that's exactly what happened. It was above 14. I was looking at this like, I knew it. But I didn't want to pull the trigger and just buy that after hours yesterday, even though I thought that news was solid. This thing was trading up to like 14.40 or so pre-market this morning. We can even take a look at that pre-market price action here. Hold on, how do I do that again? Am I losing my mind? Chart parameters. There we go. Yeah, you can see this thing trading up to like 14.40 here pre-market around 7.45, 7.50. They sold it off back down to $14 here a little bit. I kind of started with a position in this thing. I got filled at like 13.80 and 13.75 or so. I actually got a pop. That's part of what this tail is, to 14.06. So to make up for the fact that I was able to buy the low in MGI, I was offered the high in Tilray and didn't get filled. I was offered 14.06 in Tilray and didn't get filled, but I did sell stock at like 13.99 off that pop. So I was able to get some off, and I was kind of light in this, and then this thing was just a disaster. And then down here is really where I was buying. I wanted this thing to time correct up here, and it didn't. So I got a little heavier at 13.50, and I got a little heavier at 13.26. When it didn't time correct, it price corrected. And this price action here was just garbage. This price action here was just garbage. This thing could not catch a bid above 13.40 for anything. I ended up raising my stop to this low here just because I thought the price action was not good. I got stopped at like the low of the day in this thing. And I think a couple other people did as well, which is unfortunate. It is what it is. And I even commented after getting stopped out when this thing started moving higher but hadn't cleared the intraday resistance at 13.40. I commented, I was like, this thing could go much more easily now because it shook people out, including myself. Because it shook me out, that breeds more buying and less selling into any up move that comes. Because it just broke where the stop losses of a lot of people were and didn't actually follow through to the downside after that, that actually makes the stock, it just makes it much easier for it to go up. And that's exactly what happened. I know some people, Felipe kept his original stop loss, which was closer to $13 on that trade, and I hope you were able to work this pretty good here into this move. I know that if I didn't raise my stop, I would have probably ended up working this thing in such a way where I don't think I would have lost money in it. But instead, I lost some money, and it wasn't too bad of a loss, but just disappointing. I mean, I thought that news was huge. And then for the stock to only close up a percentage point on the day, that's kind of garbage. But it's telling, because that's the market environment we're in right now. We're in a market environment where, I'll tell you, if this was January or February, they would have took that news, opened this thing up at 14, and closed it at 17 today. But it's a different market environment than it was in the beginning of the year, and we got to recognize that. You got to be much more selective on those momentum trade buys because they're coming in and they're selling it. How many times have we seen that with these speculative names this month alone, on earnings and upgrades, like on that FSR that they destroyed, on the triple D that they brought all the way down, on this B-fly that broke out and then came all the way back down, and Tilray here, another one, right? On its earnings report, fully reversed it. Good news today, sold it. This is the new normal of this market environment. That's kind of one of the signals that we've been in a more of a risk-off market environment. We're not seeing those things get bid. But the concern that I've had, as you look at a lot of those stocks that I just referenced, these things are in literal bear markets. These things are not only in bear markets from the January, February highs, these things are in bear markets from like their highs in June. Like the highs 2 months ago. Some of these things are down you know, in excess of 20%, which is what a technical bear market is, right? More than 20%. A lot of them are down even way more than that. Till right here, the high was, you know, $23 in June, and you know, stock is at 13.25 here after the close. That's a bear market. You can find a lot of stocks right now, a lot of stocks that are in bear markets, and one of my concerns has been, I still don't know how this is going to play out. I don't know if anyone else has an opinion on it. The thing about the market right now that has just been, this is almost unique to me. I don't really recall seeing this too many times in my career. There was one time in 2015, I remember trading where the market didn't go into a bear market, but the average stock was down like 40-50% in 2015. But the indices held up really well for the exact same reason that the indices are holding up really well right now, which is FANG. Apple, Microsoft, Google just held up so well. And eventually what happened was everything caught up to those stocks and went higher. And then 2016, 17, 18, you know, obviously with some ebbing and flowing along the way, it was basically back to the bull market after we got through 2015. But 2015, from the perspective of the S&P, never actually hit a bear market, even though most of the stocks that comprised the S&P were in a bear market. And again, it was because of FANG. And the interesting part about now is I'm looking at this market, is what I've been saying the last couple of days. I'm looking at this market and I'm like, you know, a lot of these stocks are in bear markets, and that's why I'm looking at like an MGI and I'm like, all right, you know, I'm ready to come in and do some dip buying in this MGI. I like the company, I like the fundamentals, the technicals here. It's beaten up, it's oversold. This stock is down from a move of, you know, 12.25 down to $9, whatever that is on a percentage basis. Clearly, this stock's in a bear market from its highs that just occurred a few weeks ago in July. This is what I'm looking for, to come in and buy aggressively. But the concern is, well, if this market starts breaking down because FANG doesn't hold up anymore, are they just going to be selling FANG, or is it going to be broad-based selling? And I do know that the way markets typically work is that they sell everything. Like I said earlier in this meeting, correlations increase on the way down because fear is such a strong emotion. So that's kind of my concern right now, but it's interesting to see that some of those stocks that I'm in as swing trades held up and are even positive today with what the market did, right? Like SoFi, obviously, which was super beaten up, posted its earnings report, green today. MGI green today. The Sumo that I'm in, which is well off its highs, I'm green in Sumo today. You know, JD even green. AMC was green all day. I'm short AMC, but it was green all day and closed, you know, kind of just barely red here. So it's interesting to see that some of these stocks actually held up okay, considering how bad these indices got pummeled today, and that these indices are potentially giving us a short sale signal here for the first time, I think, in a long while. So that's kind of where we're at. I didn't end up, you know, getting those shorts on because I just didn't think there was enough time left in the day when I thought the signal actually hit. But I've dramatically reduced my long exposure. I'm out of a whole bunch of positions. We'll see how we gap tomorrow and kind of take it from there. So that's all I got. Happy to take questions. What's Hood doing here? Not much, huh? I guess it's down $4 or so from where it closed. It's really not too big of a move, though. I didn't see the numbers, so maybe I'll be able to see the numbers here in the VTF. Robinhood says seasonal headwinds to result in lower Q3 revenue. Hood expects considerably fewer new funded accounts in Q3 than prior quarter. That all makes sense to me. But it's holding up pretty well, right? Thanks, Rich. All right, so first question I'm seeing in here is from Michael, and I just accidentally lost it, so let me scroll up. There it is. All right, since January this year, we seem to pull back to the 50-day in the indices, and that's been a good time to buy the dip. Okay. Let me see if I actually don't have a 50 on this chart. Actually, let me see if I can just add it to this other chart real quick. Or maybe someone can just tell me where the 50 is right now, because I actually don't have it on this chart. SPY 433. Hold on, I think I can add this quickly right now. That wouldn't work. I'll add it to toolbar. Pat! I'm so bad at this stuff, man. I don't know why it won't appear. Add. Oh, there it goes. Add. Boom. Did it work? It should be this green line here. So let me just confirm. What price did you say it was in the SPYs? 433, 33, 35? Okay, yeah, so here's the 50-day. All right, so let me reread the question now that I add the 50-day to this chart. Pull back to the 50. Yeah, that's happened a bunch of times, and they've kind of defended it, and it's been a good time to buy the dip. It's a bull market. Any reason to feel differently now? Curious your thoughts. Since I started with T3, I noticed your sentiment shifting here recently on the market. You seem more skeptical of continuation. No, you're 100% correct. For me, it's way too early to be talking about what the market should do at the 50-day. So I do not believe in moving averages as support or resistance. I think that they can be self-fulfilling prophecies. So clearly here, looking at this daily chart of the SPYs, excuse me, you can see just how many times it is more or less like perfectly held that 50-day or pierced it and come right back up. I do think that's a little bit more of a self-fulfilling prophecy than anything. We do know also from Pat's notes that give us a good, clue into sentiment and money flow, that there's still a boatload of cash on the sidelines that seems ready to come in and buy dips. So does it make sense that 50-day could hold in that area as potential support? Yeah. Will it hold this time? Will we see a repeat of just 5 days of selling like we saw here in July, leading to market capitulation on volume, which is exactly what it's supposed to do, into the 50-day and then an immediate snapback? Could that happen? Absolutely. Will it happen? I have no idea. I can't assess that till it's actually there. What I want to see is what the chart and what the price action looks like when it's actually touching that 50-day. Are we extended into it? Like here on the last test as an example, we were even if I didn't have the 50-day on my chart, I would have been looking to be a buyer that day, because it was the 5th day down. The market at lows was massively extended compared to the 8 and 21 EMA, which again, that 8 and 21 EMA is a space I consider to be technical equilibrium. Volume maximized. This is when I'm looking for a bounce back. It doesn't have to be a full-on reversal to new all-time highs like happened here and has happened consistently, but this is at least where I come and I look for a bounce back. And then markets are trickier, I think, into equilibrium. When you've got extension on one side or the other, it's a simpler game plan on knowing to be defensive or knowing to come in and look to buy because of how extended we are to the downside. It's once you get that snapback into equilibrium that becomes more difficult, because then the question always is, all right, are we going to get a lower high here that leads to a lower low to a further breakdown, or are we going to just continue the snapback to all-time highs? And it's very difficult to predict that. Obviously, the trend is your friend. A great general rule in trading is that you should always expect trends to continue. If you keep that rule, obviously it doesn't hold true 100% of the time, but that's what happens most of the time, is that trends hold. So we got to assess what the market looks like when it gets down there. If we're touching the 50-day tomorrow, I'm coming in, I'm buying, because we're going to be massively extended, unless there's some sort of exogenous news factor or something like that I'm not aware of. I'm coming in, I'm buying. If we're at 433 tomorrow on the SPYs, I promise. I'm looking to buy, not short selling. And that's why I said the gap down tomorrow is also potentially tricky, because it's going to be too difficult to short at that point, but it's not extended enough where we really want to buy. You get me down to 433 tomorrow, I'm definitely buying. But that buying is really just for a shorter term bounce. And the question is, well, if that shorter term bounce, when it happens, does it lead to a lower high or not? And the potential of a lower high coming into a lower low is when you have an actual trend reversal. And that's when things come completely different. So I'm not sitting here with a magical crystal ball where I can just look in and tell you guys the future. The way that we like to view markets is in terms of if-then statements. if this happens, then I expect this to occur. If we are so overextended into the 50-day tomorrow on massive volume, then I expect the market to be able to give some sort of bounce. If the market bounces and then it's giving a lower high as the 8's coming below the 21 and we get an upside pivot with an upside shooting star on that bounce day, then I expect the potential of a new low to come in that could lead to a lower high for the market where we start actually trending down. That's a lot of if-then statements before we get into a market that's actually breaking down. So I am not a trader. I'll tell you what, this is what I could do right now. I'll tell you what, I'm not going to do it. I think Josh already kind of did it I heard him out of the corner of my ear. But this is not how I operate. It's not how to make money. No offense to Josh. I could, if I wanted to right now, come out and say to you guys, this is the high of the year. It's over. And if I'm right, I'll look like a genius. And if I'm wrong, I'll kind of ignore that I ever said it, and we'll be at all time. That's what they do on CNBC, right? I'll just pretend like I'm one of those jerks on CNBC who just calls all these like they all call tops and call bottoms. Like one of my like the biggest exercise in futility of all time is how at the beginning of every year everybody in CNBC gives their year-end price target. Like they have any idea. No one has any idea if there's going to be a new pandemic that hits or a world war or something. You got no idea. So we kind of take it day by day and we go if-then statements. I could say to you guys right now, this is the high of the year, and you'll all say, hey, Derrick was so smart. That's not how I operate, because I'm actually a trader and I'm not a CNBC pundit. So we got to take this day by day. What I'm saying to you is today's a day to take notice of. Yesterday was a warning signal. Today's a day to take notice of. We've broken down a little bit here. We're still relatively close to all-time highs. And we'll take this day by day and we'll see degrees of extension. We'll see if we get a trend reversal, which we're nowhere near a trend reversal. Trend reversal is a pattern of lower highs and lower lows. We don't even have either a lower high or a lower low, let alone one of each yet at this point. So that's it, Michael. You know, it's just it's constantly assessing the information and assessing your positioning. And while the market was at all-time highs every day this month, you know, how are you going to start exiting long positions? It's like I've been talking about, I think I said this in a couple afternoon meetings recently, that people who are hurting the most right now are long the stocks that are in bear markets already while being short the market because they think they're hedged. That's like the brutal, brutal trade of the summer, is you're shorting SPYs and Qs and you're long, you know, Triple D and Tilray and Palantir and those names at the same time. That's like, that hurts. I hurt for you. And that's a lot of hedge funds right now are like that. They can tell you that for sure. What's NVIDIA doing here after hours? NVIDIA is up from where it closed though a little bit on those numbers, so maybe that can help us get a gap up tomorrow. Scrolling down here for questions. AMD's PE is now cheaper than NVIDIA. Brand saying hood looks interesting here. I'm sorry to hear that, Lee. Anyone shorting NVIDIA here? I'm not even really looking at it. Oh man, they snapped that thing back pretty hard. I haven't been watching the after hours actions NVIDIA because I've been doing the meetings. So I can't really give any feedback on hood or NVIDIA right now from the after hours session. From Steve, do you see any signals from yesterday late in normal hours indicating Home Depot would break out? Well, Home Depot moved on lows today. You know the reason why Home Depot, what the, last I saw Home Depot was that high, so I stopped looking at it at 10:30. Home Depot moved on lows, right? So Lowe's reported earnings. The market really liked the number. What did Target end up doing today, by the way? Target tried to snap back. Target went green at one point today. Target's numbers weren't great, but the buyback I thought was very interesting. Lowe's is another one that does a big buyback. So the market liked Lowe's numbers. Worked its way up to $200 resistance today. I didn't trade it. I wasn't really watching it. But Home Depot moved on Lowe's. So that would be your signal to look at Home Depot. They moved together for obvious reasons. Scrolling down here, Jack asking about Bumble, BMBL. Interesting. What did Match do today? So Match was another one of these names we talked about in yesterday's afternoon meeting. And it's interesting. It's so interesting to me to see that this is another really beaten up stock that was actually able to catch a bid given what the market did today. Really interesting to see that money did come into some places, considering that the market just got destroyed. And this is what I was looking for, was for these beat up stocks to catch a bid. So we looked at that MGI. I didn't like Match so much today because it didn't have a signal, right? Like it just closed too near lows. But so from a company perspective, from a fundamental perspective, I would let you know I like Match better than I like Bumble. BMBL. From a technical perspective here, this Bumble is solid. This is a good day for it. It worked its way back up to 52 resistance. I like the long here above 52. If we can see continued strength, you definitely got to keep an eye on the market though. You know, with the market potentially breaking down. In the same way you guys hear me say all the time in our morning and afternoon meetings that I don't, like sometimes you guys will show me a great chart for a short, but I'm dealing with a bull market that makes me not want to take that trade as much. If the market starts to break down, I'm going to be much, and I'm not saying that that's happening. We're still in a bull market. We're still in an uptrending market. We just had one day of a pullback. But if the market really does start to break down, then I'm not going to be as interested in longs, even if the chart looks good. And bottom line though, I like the Bumble chart. I like the relative strength today. I wish there was more volume. I think you can be long through $52. You got to see what the intraday price actually looks like when it triggers. Good job on your hood trade there, Brant. Led Zeppelin, I love it. Marty from YouTube, really appreciate the afternoon meeting. Yeah, no problem there, Marty. Glad that you're tuning in. Thoughts on Open? Cheers from Manhattan. Word, I'm here too. Man, this Open's just another one that's, you know, we went over a bunch of these, right? Like FSR and Triple D and Tilray today to talk about how the market has changed since the beginning of this year. And by the way, not to get off topic, the hallmark of a successful trader is not one who just comes in when the money's really easy and makes money. The hallmark of a successful trader is the ability to be able to adapt to any market environment. So that's what we're constantly trying to do here as a team of professionals, is we are assessing how the market environment changes over time. These stocks, Open, Triple D, Tilray, FSR, all these B-Fly, all these ones that gave these big bids over the course of the last 2 weeks on their earnings report or whatever the news is, those things would have maintained those bids and given upside acceleration if this was earlier on in the year. And it's just not that environment. They're all failing. Open doesn't look good. I do not like how they negated this high volume day here and brought it right back down. Now, I don't think it looks bad necessarily either, as long as it's still holding above 14. You got really big support in this $14 area. I just think that this is kind of more dead money than anything. It's not something I want to be short by any means. I like the company also. I'll let you know that. I like the business model of what this company tries to do. I think it's a Kathy Woodstock. I think she's involved in it. Not that that matters too much to me. But it's definitely an innovative company here that's trying to do some outside-the-box things in real estate. So we want to see if this thing can hold 14. I have no interest in shorting it, but the buy here looks very tough. If they sold this, what's going to get this thing to actually go is the question, right? If this thing can't rip and hold the gains on an earnings report like that massive upgrade on FSR on that big volume, if it can't hold those gains, what's going to allow this thing to actually go up and hold gains if it can't do it on that? It just tells us that these things need a lot more time. So again, still holding above 14, fine, but the market environment's just changed, so we just got to adjust to it. William here, do I utilize level 2? I sure do. You know, here's NVIDIA here. I was commenting early on in the selling in Tilray when we were trading it as a team today. So when you're trading with a professional company like T3, so I know that we're doing this broadcast on YouTube now, so we got some guests who are tuning in. Most of the people on the virtual trading floor that I run which is called the ProDesk are professional traders at T3 Trading Group who get free access to my virtual trading floor. You can also be a subscriber to it. You know, there's some subscribers in here as well if you reach out to the folks over at T3 Live. We have direct market access with our routing here, and our orders are not being sold out to HFT firms, which is what happens at most retail shops like, you know, whatever, Schwab and TD and E-Trade and things like that. So there's a lot of advantages to that, and our tape is as pure as it can be. I grew up in a trading environment over a decade ago now where tape reading was a really important skill. If this was 2010 and you said to me, Derrick, you can only have your level 2 in your tape or charts. You can't have both. I would just take my charts away, I don't need them. Here we are 10 plus years later, the market environment, right, that's what we're talking about just now, market environments. The market environment dramatically changed. It's the opposite. It's the opposite. If I'm working with anyone who's newer to the business, it is about the charts. It is about the technicals. The tape, and people consider me to be a good tape reader. Josh over here, who's been in the business for a long time, he'll give me a compliment that I appreciate. He says I'm the best tape reader that he's known. I have that skill. I'll tell you it's not as important, not nearly as important as it used to be. It's important in certain specific scenarios.
It doesn't hurt.
It doesn't hurt. It's important. It helps with it helps with execution. It's important if you're trading earnings after hours. If I was trading NVIDIA after hours right now, it would be all about tape. It's important if you're trading an IPO. It's important if you're trading news. And again, it helps with execution. If I can see that there's a seller at 20 cents and I'm offered at 22 cents, I know I need to bring my offer down to 19 cents. And that could be a refreshing institutional seller or whatever. So to directly answer the question, yeah, I do. I definitely watch it, but this is not something that you want to be watching, I don't think, tick for tick anymore. One of the worst things that you can do as a trader is you've got a beautiful, great technical trade, and you think you see something in the level 2 that scares you out of your trade. And now you're just giving up on profit over kind of nothing. So that's my thought process on it. Let's see here, scrolling down in ProDesk from Aaron K. Cool, got a couple Aarons in here now. With rising COVID concerns and booster vaccine shots rolling out in September, what are your thoughts on vaccine names like Moderna, Pfizer, J&J, and Vax? Yeah, so the moves in these stocks have been a little bit baffling. We've had some really great trades in Pfizer here on the way up. I don't like trading Moderna anymore. It's become too expensive. Moderna at $400 or $500 is too thin and it's too expensive. I don't like trading it. The stock clearly went parabolic. You can see it. Clearly went parabolic. I did a little video today on what momentum is. This is the definition of momentum in a chart right here. We did kind of call out the short on $500. I didn't take it. I don't like trading stock. It's just too expensive for me at this point. I don't like these expensive, thinner companies. The question really is how much of the booster stuff is priced in. I don't know the answer to that. I would assume a lot, given the degree of the move. I mean, what's the market cap change in Moderna from mid-July to mid-August here? Like, what's the market cap change from 240 to 500 over expectations of booster shots? What?
Around 80 billion.
80 billion? Guess? That was a guess from back there. Pfizer. The Pfizer is almost the most interesting one to me because I remember back in 2020 here, where's 2020? It's almost hard to tell. I remember back in 2020 here, I had like my 100 billion. I remember seeing my dad and some of his friends at one point, and they were like, "Oh, you know, I'm long Pfizer. Why isn't it going up?" I was like, "Well, Pfizer's not a pure play for the vaccine. That's why. That's what you want to have Moderna. You want to have BNTX. You want to have BNTX because those are the pure plays. And Pfizer is just such a big conglomerate of a company that the vaccine itself means less for the bottom line. So the Pfizer move, if anything, has been kind of the most incredible one to me. I know some of the guys here on the team are actually shorting this, I think, today. So hopefully you guys made money. If you're looking at that degree, the overextension in this is just massive. We actually had some good long trades on these bull flags here on the way up. But again, it goes back to what I just described, which is how much is priced in when you've already had these parabolic moves? I think a lot. So
Do you think it's priced in for booster shots every year for the rest of our lives?
I don't know.
That's what I was
I don't know.
thinking. It is pretty profitable.
I don't know. The question that Josh asked, I don't know if you guys can hear him through my microphone, is do I think it's priced in for the rest of our lives? I don't know how long-term the market's thinking on that. But this is a huge move in a short period of time. So I think at least in the short run it's priced in. And if anything, this Pfizer just gave a topping signal today. And when I say topping, I really mean retracement, because like I said earlier, I don't believe in calling tops and bottoms, even if we sometimes do it successfully. Pfizer here is telling us it should pull back maybe to 47 bucks, and then we can reassess it in there. You know, basically to do exactly what Moderna did, pull back into this equilibrium area, and we can reassess it as it builds out this wedge. This Moderna might just need more time. So I don't really want to go to these. I think Pfizer is the most tradable of them. Yes, NVAX is also kind of crazy expensive. This one hasn't moved in the same way. Yeah, so I don't have a direct answer for you. We'll keep an eye on the price action. I do think a lot of it is priced in at this point, though. You got to remember that the market's a forward-looking mechanism. So it's not a surprise to me that like on the day that they like officially announced that people can get another booster in 8 months is the day that the selling actually came into Pfizer. You know, that's the whole buy the rumor, sell the news saying that is a very common saying in trading. That's what it comes, the reason why that saying in trading, buy the rumor, sell the news, exists is because markets move on expectations. So market moves on the expectation, on the rumor that something is going to happen, and then sells off on the event itself because they overpriced it in, and then it's those last kind of weak hands that are coming in and doing the buying, or as the smart money is actually coming in and selling. Yeah, so it's a different. So Michael here is saying that I made a great point, and something that you've struggled with in July and August, as have a lot of people, is adapting to the new market conditions. There's been a lot more failed breakouts with no follow through, and it's been tough. I think that July and August have been the most difficult 2 trading months that we've seen in the last 2 years, which it is what it is. You know, markets are constantly evolving, they're constantly changing. I've been in this business for too long. It's not always easy. Sometimes you get a hard 2 months. Guess what? Sometimes you get a hard year. 2015 was such a hard year, but you got other years in 2020 that are easy. That's how markets work. And again, it's about understanding that market environment. And what we've been saying here, where I think we've done a great job of a team saying here regularly, even though it's a boring message. Believe me, I hate when it's the morning meeting and I'm saying to you guys, I don't really like much today. I think it's a less is more type of day. I think we need to be a little bit more hands off. I don't think we should do a ton of trading. I think we should be very selective. I hate saying that. That stinks, man. I want to be here pressing buttons and making money and rah, rah, rah. We're having fun. High fives all around. Bottles and models, all that good stuff, right? That's what I want to be saying to you guys. But if I did that every day, I'd be a liar, right? I would just be here trying to be Madonna for you guys instead of actually providing information that can make us money. And that's what I want to do. What my goal is to provide the best commentary on price action that can make us and save us money. And 2 sides of that, right? Make us and save us money. And knowing when not to trade is such an important thing, or knowing when to be significantly more selective is such an important thing, because that is how we save money. And the market here from July and August has said to us, you gotta be significantly more selective with what you're doing.
Also, those good times will come again. So
and the good times will come again. So that's exactly right. So Josh said that, you know, when it's difficult like this, it's important to know to take that step back, because you are preserving yourself for when the good times come back. And they will come back again. Can't tell you when. Maybe it's, you know, mid-September we kick off again. Seasonality would justify that. Or maybe it's not, you know. But when the market's more difficult, you gotta be able to preserve yourself and eke out a living for yourself where and when you can. Steve here asking me about thoughts on you. 5-day, 15-minute, long against 1680. This U's been an interesting looking chart. You know, really broke out here. So I always got to start with the daily chart, even though I know you want me to look at a little bit smaller time frame. Broke out about 1550 on this high volume Maribozu day. That's really solid. Low of that Maribozu day is 107.03. So we got to pay attention to that. You guys able to see this chart, or is it too big? I guess no one's complaining. So this is the chart of U here. And now you want me to look at the 15-minute here at 1680? Is what you're saying? 1680 is around here. Yeah, so that's that pivot low, I guess, from today. I like it. I like it because I like the daily chart. A few days of rest here. You can see that on that 15-minute on a good-looking daily that's broken out. So this is the area that you want to see this thing pivot. When I look at this daily candle, I'm not thrilled about how it closed. So I might actually need to pierce that, create a little bit of a lower high. I really think this spot's to be long versus 1550. That's where it broke out from, 115 to 115.50. Ernest here, any chance you'd give us your thoughts on gold in the miners? Where is my man Diego? I have a gold miner specialist on the team here. But yeah, we can take a look. So GLD I think has just been extremely sloppy. Obviously had that crazy kind of breakdown in August over the course of 2 trading sessions, but also had a really big snapback on it. So gold's been sloppy. My best trade, just so you know, even though I actually don't really trade the miners too much, my best trade in all of 2020 was in that JNUG. I crushed this up move off of lows. It was one of the best trades of my career, actually.
Like 2 to 10.
Yeah, it was. Then they did the split, right? It was split. It was like a $2 ETF at that point, and then they reverse split it. But yeah, let's take a look at. So I always want to look at GDX actually first to get a bigger picture of the miners as a whole. The GDX looks terrible. Had a bearish consolidation here that broke down through 32. So GDX does not look good. Yeah, you got some bigger support, maybe around like 30 or so. GDX does not look good. AEM is actually one of my preferred names in the miner space if I'm looking at miners. This AEM does not look good. I don't think this is where we want to have our money right now. I think that we want to be patient, let this stuff reset up a little bit. Yeah, maybe around 55 bucks, get some support there where you could look at it. But I do not like this breakdown here in AEM. Nugget. What's Nugget? That's the opposite of JNUG, right? Man, I'm sorry. I don't like these charts. They're all breaking down technically here. Yeah, this one's coming into some support. I just think that these things need time. So like, even though these charts don't look good to me, I'm by no means looking to come in and short them. But I don't think you can responsibly be long these things. Maybe you do have a little bit of a support trade here at like 49 bucks in Nugget. I just don't like that doesn't correspond to the support in AEM yet. And you also got to remember that these leveraged ETFs have time decay. So this thing will bleed lower inherently over time. Like, you don't ever want to be sitting long a leveraged ETF, or sitting long, even worse, sitting long like a UVIXI or a VXX. These products have time decay. They are designed to go down over time, even though they can have really big pops like VXX did here in coronavirus really fast. But look at VXX if you really scroll out. I can't even see the top. You know, this thing was $500 million split adjusted. That's not fake. It's not fake. It just has time decay. It only ever goes lower. So like an ETF like Nugget has that too. Maybe not as bad as those VIX products, but these are things that you don't want to be sitting in the long run. If you're like a investor and you really believe in the gold miners, then you would want to be long an AEM as an investment, never like a Nugget. These are specifically trading vehicles if you have the setup for them, so you can get more bang for your buck. But I don't think that they look right now. Man, the USAS is actually getting extended. I'm not really as familiar with this USAS. I'm sure Diego knows all about it though. This $1.20 breakdown. The only thing about it is it's becoming extended. But yeah, I don't think they look good. David says Moderna has a larger market cap than Pfizer and Guild. Interesting. It's kind of nuts. Rich, so when I'm supposed to go out to dinner with my wife and a family member, so I gotta get out of here somewhat soon. Rich saying, so when we find ourselves trading very well, then how do we adjust our process to trade bigger without making trading errors due to increased tier size? So Rich, given a question here off the comments I was saying earlier about, you know, knowing when to preserve capital and knowing when your times are good. Basically, the question is, when you're in those good times, when you're trading really well, when you're making money consistently, how do you get bigger? I think that getting bigger as a trader is something that you want to do almost kind of as a slow creep. You want to increase yourself kind of slowly over time. The P&L swings that I have on a day-to-day basis, the P&L swing I had today, when I was a new trader, I probably would be in the bathroom crying and vomiting. And I'm not kidding. Like, I remember the first time when I was a brand new trader that I lost $750 in a day. I wanted to curl up in a ball and die. And today I still closed green, but I closed, 5 figures off my highs. My P&L pulled back 5 figures from its highs as the market corrected into the close. I would have been freaking out. Today I just kind of was like shrugging and kind of making jokes and talking to the gang over here. That happened over the course of over a decade. That's a slow creep. I remember when I was a new trader, what I did was I increased my maximum tier size that I would allow myself to take, like my maximum share size. I increased it by 200 shares every time I had a positive week. And then what ended up happening was actually that got me too big too fast, because I was trading well and I had a consistent of pretty consistent weeks, and then all of a sudden I had a max tier size in the thousands of shares, and my P&L swings were getting too big too fast, so I had to pull back from it. But that's really it's got to feel natural. You can't go from making and losing $1,000 to making and losing $10,000 in like a week or a month or something like that. That should be a progression that really comes in slowly over time. You got to be comfortable with the numbers. Like, if you're ever seeing, so we talk about risk management, right, all the time. I don't want to get too much into a risk management meeting today because it's already 10 after 5. Risk management is the key to success in trading. So what we talk about, though, is that everyone should have a max loss, a max daily loss, and that number varies per person and it varies based on experience level and account size. But let's say that your max loss is $500. Use some simple numbers here. That should mean that you should be able to have good days where you make $1,000, $2,000, $3,000 on your really good days. Those numbers make sense. So your max loss should increase over time slowly. One of the basic ways that I recommend a starting max loss is and this is more on the pro side of trading. This might not apply to retail people as much. Is 5% of your risk capital. As an initial starting max loss. And by the way, max loss is a number that you should never get to. That's the lockout, actually. Your limit down should be a number that is less than your max loss. So as you're doing well, your account increases. Your account increases. If you're using the same percentage number for a max loss, that number then slowly increases. So now if it's 500, it becomes 650. And 650 becomes 800. And then what you want to see is proportionally the upside increases. If a good day for you when your max loss is 500 is making $2,500, now a good day when your max loss is $800 should be $3,500, right? So it's all proportional creep on as your account's growing because of your success. William has a follow-up for me. See level 2, huge orders coming in on the level 2 and then disappear. Could that be institutions trying to misdirect traders, or how do you think about that when it happens? So that is I had the NVIDIA level 2 up. This is one of the reasons why tape reading has become more difficult over time is because, one, there's more fake liquidity in the market than there ever has been before, and 2 is that the robots are better at disguising their orders than they ever have been before. Though right now there's 20,000 shares on the offer here, 195 in NVIDIA. Those are printing, printing very slowly here, 400 shares, 200 shares, 100 shares at a time. But that's real liquidity that's printing, and spread here is 18 cents, and they couldn't print that. They couldn't break the offer because the prints on it weren't heavy enough. So now you're seeing a little bit of a downtick to 75. Inside offer came down. Obviously, it's an expensive stock, so it's spready. But yeah, to directly answer your follow-up question here, when you're trading after hours, though, this I said earlier, you're trading NVIDIA after hours on its earnings report. This is actually when the tape tends to trade more pure than during the day. because most of what you're seeing here is actually, there's a lot more hand traders and less algorithms that are trading after hours. And that's why the level 2 and the tape is actually more pure when you're trading an earnings report after hours than it is during market hours on a typical day. Because that's when all the robots are going to be back on. And it's the robots that are providing a lot of that misdirected, fake liquidity that you're kind of referencing. Yeah, so let's answer that. Yeah. That's what happens in the office on the good days. Models and bottles, bottles and models. That's just one of them old trader sayings. Or maybe it's true. Maybe, you know, maybe we're having those bottles here. I got some bottles of Maltai, some Baijiu over here. Anybody knows what that is? We're gonna start down in that. All right, gang. It's 10 after. I'm gonna call it. Diego here giving some feedback on the miners for whoever asked. He's waiting on them. Need gold to hold and get back over $1,800. Clear breakout of the 200-day would get you pumped on gold and the miners, but for now it's just scalping and waiting. AEM, NEM. Today was very odd. Gold was flat. Miners all down 2 to 4%. Flow is better for sale still. So Diego giving us some information there. Aaron, I would say focus on the charts. Focus on the charts. All right, gang. Let's call it. It's 5:15 here, and I got a dinner date with my wife. I got a dinner date with my wife and some random third cousin that she has from Ireland who's here in New York that none of us have ever met. So it's like kind of the closest thing I've ever been to a blind date. So we'll see how my blind date goes with this Irish fellow. Have a good night, everybody. I'll see you all tomorrow. ProDesk VTF, check it out.